1, 2, 3. 1, 2, 3. Sorry guys, I'm adjusting my audio levels. Hello, hello, 1, 2, 3, 1, 2, 3. Hello, hello. 1, 2, 3. 1, 2, 3. 1, 2, 3. One, two, three. Let's test it out. 1, 2, 3. How does that sound? Oh, that's horrible. All right. How about now? Does it sound better? 1, 2, 3. How about now? I'm messing with the levels real quick. I'm gonna turn down the music a little bit. Turn down the music. Tell me how it sounds. 1, 2, 3, 4, 5. 1, 1, 2, 3. 100% better. 1, 1, 2, 3. 1, 2, 3. Perfect. All right, let me put the music back on real quick. I'll turn it down a little bit. Well, welcome to some crypto news today. Shout out to everybody in the chat. Crypto Poppy, I see you. The people want to see you pretty soon. Okay, guys? Alrighty. What is up, guys? This is JJ with Buddhism Crypto. We're back with another live. Today, we're going to be covering some more crypto news until we get Crypto Poppy back in the studio to do some live technical analysis. Until then, we're just going to be covering the news. If you're watching the live stream now, come on in. Let's see now. Let me set up. Give me another second. I need to set up my other screen real quick. Let's see right there. Oops. Cut off a little bit. Hold on. Let me see. Transform. So you guys could see me on the screen. Let's see. I'm right here in the corner. All right. I'm right here. Okay, guys. So on today's news, we're going to be covering this news from, what are we looking at right here? TS2.tech. Bitcoin price today, December 1st, 2025. VTC USD crashes below 86,000 as BOJ shock, DeFi hack, and ETF outflows hit crypto. Another one from CoinDesk. Strategy establishes 1.44 billion cash reserves, slashes 2025 profit. Bitcoin yield targets. Another one on our stories. Cointelegraph. Tether CEO slams S&P ratings agency and influencers spreading USDT FUD. All right, another one from beincrypto.com. Tomorrow the Fed ends QT. Crypto thinks the melt up starts now. And last but not least, could this one shocking new catalyst send Zcash to 1,000? This is from Yahoo Finance. All right, but before we get started, guys, excuse the screen. Things, it's this side. Yeah, excuse the screen. I need to get a bigger green screen. Anyways, excuse that. Before we get started, if you haven't subscribed to the YouTube channel, please do. We're on our path to hit 1,000 YouTube subscribers. We're very close, 753. It doesn't cost a thing. Please subscribe. Leave a comment down below. Like this video, share it. And if you have any suggestions for the next live technical analysis video, please put them in the chat right now. And if you have any questions, let me check. I think Crypto Pop is still in the chat just to make sure. Let me check. He could answer your crypto questions. Yeah, I think he might be in the chat. So anyways, if you have any questions, go there. All right. So let's get started now on our news stories of the day. All right, we're going to start here. TS2.tech. Bitcoin price today, December 1st, 2025. BTC USD crashes below 86,000 as BOJ shocked, DeFi hack, and ETF outflows hit crypto. Let me zoom in a little bit so you can see it better. Oh, man, I'm going to have to, let's see. All right. Bitcoin kicked off December deep in the red. At the time of writing on December 1st, 2025, BTC USD is trading around 85,800 and 86,000, down roughly 5 to 6% in the last 24 hours, and almost 32% below its October all-time high near 126,000. The move extends as The move extends a bruising correction that has already erased all of Bitcoin's gains for 2025 and wiped more than $1 trillion of the broader crypto market's peak value. In this article, you'll find today's Bitcoin price overview and key BTC and USD levels, the main reasons BTC is falling right now. I'll look at the technical picture, dead cross, support and resistance, blah, blah, blah. We're just going to cover some of it. We're not going to cover the whole thing. All right, Bitcoin price today. BTC USD slides under 86,000. Real-time crypto and the real-time crypto and derivatives data show BTC USD last near 85,860 with an intraday high around 91,900 and a low just under 85,700, implying a one-day loss of about 5.9%. Newswire broadly agree on the scale of the slump. Reuters reports Bitcoin fell nearly 5% to about $86,750, marking its sharpest daily decline in a month and extending November's $18,000 slide. Bloomberg notes BTC briefly traded beneath 88,000 and a risk-off start of December. UK Business Live coverage says Bitcoin has sunk below 86,000, down from an October peak above 126,000 as leverage positions unwind. Let's see. Let's surpass this. Let's see. Let's go back to this. All right, let's go to this right here. Why is Bitcoin dropping today? Today's sell-off is not driven by a single headline, but by a cluster of macro, structural, and crypto narrative shocks hitting at once. If you guys been in the crypto market for a long time now, and by a long time I mean like more than 2 years, 3 years, 4 years, we've seen worse things that have happened right now. The crypto market has been horribly low before. So if you've been following this channel all along, this is not a lot for you. All right, let's see. 1. BOJ shock and the yen carry trade unwind. The most immediate macro trigger from Japan, Bank of Japan, BOJ, Governor Kazuo Ueda signaled that a rate hike is on the table for the December 18 and 19 meeting, sending the yen sharply higher and pushing Japanese bond yields to their highest level since 2008. This trends the long-standing yen carry trade, where investors borrow cheaply in yen to fund position in risk assets like tech stocks and crypto. As the trade unwinds, leverage is cut and high beta assets such as Bitcoin are among the first to be sold. One detailed market note describes Bitcoin's move as a liquidity shock as the yen rallies and Japanese yields climb. As speculators face higher funding costs and begin the leveraging across crypto, amplifying downside volatility. So Japan, people are liquidating their Bitcoin in Japan. All right, number 2. Let's see what happened here. Number 2, year-end finance DeFi hack rattles confidence. At the same time, crypto is dealing with a fresh DeFi security incident. Year-end financing ETH products suffer an unlimited mint exploit, allowing an attacker to drain its pool in a single transaction. Estimates suggest millions of dollars in liquid staking tokens were stolen and routed through Tornado Cash linked to addresses. Year has confirmed the incident, stressing that its main B2 and B3 balls remain secure, but the hack has undermined trust and DeFi risk management, just as markets were trying to stabilize. Macro-focused desks, including Saxos, note that crypto opened December under pressure after the year-end hack, with Bitcoin trading in the mid to 80,000 area, down about 5% in 24 hours, while major altcoins slide 6 to 8%. 5% down is not a big deal. Okay, guys, that's normal movement for crypto. Let's see. Number 3. ETF outflows and institutional de-risking. Today's drop also continues to a broader institutional shakeout. Reuters reports that U.S. spot Bitcoin ETFs saw record November outflows of about 3.43 billion, reversing much of the inflow euphoria seen earlier in the year. Separate analysis highlights over 1.2 billion on ETF outflows during a previous leg lower, as the much celebrated ETF era cuts both ways. Large passive inflows on the way up, but equally powerful outflows during stress. Several analysts argue that Bitcoin's sharp swing in late 2025 are now tightly linked to ETF and derivatives flows rather than purely retailer speculation. Number 4. The Fed just ended quantitative tightening, but markets are in wait and see mode. Ironically, the sell-off arrives on the day that should, in theory, be supported for risk assets. On October 29, the Federal Reserve announces it will end balance sheet runoff on December 1st, effectively halting quantitative tightening (QT) after shrinking its holdings by more than 2.2 trillion since 2022. As of today, QT2 is now officially over. The Fed is stabilizing its balancing sheet around 6.6 trillion, which many strategists see as a bullish liquidity shift for risk assets over the medium term. Crypto-focused outlets have hailed that this is as the potential start of a new liquidity super cycle, drawing parallels to 2019 when the last QT pause helped fuel the major BTC rally. So here in the U.S., we're still looking pretty good. Like I said, this move down for 5% on Bitcoin is not that much. It's not a crazy move, honestly. And then with the Fed starting injecting more money into the economy, untightening his belt, letting all that money flow out again, I think that's going to be good for the American economy and crypto in general. Let's see, what else do we got? All right, we won't get into the technical analysis part of this. We'll let Crypto Poppy handle that. We're done with this story. Hold on, let me take a quick look. I was waiting on a message real quick. Let me look at the live chat as well. Oh, yep, Crypto Poppy's in the live chat, so say hi to him if you're in there. Let's see now. All right, so that's that for now. All right, next story for today. Coindesk.com strategy establishes 1.44 billion cash reserves, slashes 2025 profit and BTC yield targets. Led by Executive Chairman Michael Saylor, the company also added to its Bitcoin holdings last week, bringing its total stack to 650,000 Bitcoin. That's insane. They have a lot of money into Bitcoin. All right, what to know? Strategy MSTR has sold common stock to fund a 1.44 billion cash reserve to fund dividends on its preferred stock. The company's sizable cut is full year profit and BTC yield targets given the sharp recent declines in Bitcoin's price. The company added modestly to Bitcoin holdings last week, bringing its total stack to 650,000 coins. Let's see. Facing questions from critics about its stability to fund dividends on its various class of preferred stocks, strategy MSTR and executive chairman Michael Saylor early Monday announced that the formation of a 1.44 billion US dollar reserve. The reserve was raised via the sale last week of common stock on the company. Initially intends to keep enough money in the reserves to fund at least 12 months of dividends, according to a press release. Strategy further intends to add to the reserves with the ultimate goal of covering 24 months of more dividends. CEO Fong Li noted the reserves currently covers 21 months of dividends. Let's see the new targets for them. Given the reality of recent plunge in Bitcoin, BTC is at $86,433. Prices down another 5% to $86,000 on Monday morning against company expectations for $150,000 at year end. Strategy also adjusted its full year profit and Bitcoin yield targets. Now, assuming a year-end price range $85,000 to $110,000, Strategies guided to full-year net income ranging from a loss of $5.5 billion to gain of $6.3 billion. The so-called Bitcoin yield target has been cut to range of 22 to 26 versus the previous target of 30%. The full-year Bitcoin dollar gain target has been cut to $8.4 billion to $12.8 billion against the previous targets of $20 billion. Fresh Bitcoin buys. The company also announced modest new Bitcoin buys of 130 coins for 11.7 million or 89,860 per Bitcoin. That brings Strategy's stack to 650,000 Bitcoins acquired for 48.38 billion or 74,436 per coin. The purchase was funded via the sale last week of 8.214 million shares of common stock, which raised for 1.478 billion. The bulk of that money went to the fund, the previously mentioned dollar reserve. MST shares are lower by 4.4% per pre-market trading, alongside Bitcoin's steep overnight price decline. So, Michael Saylor keeps buying Bitcoin. He keeps borrowing against his own stock to buy more Bitcoin. I mean, if anyone is gonna mess up Bitcoin's price, it's gonna be this guy. He's leveraging too much, but I mean, the FOMO's real. We'll see what happens if the price keeps dropping. All right, next story now. Let's check the live chat before we move forward. Oops. Does it sound good? Let me know, Crypto Poppy. He's still in the chat, so show some love to Crypto Poppy. All right, next story. Tether CEO claims S&P rating agency and influencers spreading USDT FUD. The comments follow S&P downgrade of USDT's ability to maintain its peg, which cited Tether's Bitcoin and gold reserves as a concern. Tether CEO Paolo Ardonio and market analysis pushed back against S&P Global's downgraded rating of USDT. The ability to maintain his US dollar peg, saying that the ratings agency did not account for all of the Tether's assets and revenue. The Tether's group total asset at the end of Q3 2025 total about 215 billion, while its total stablecoin liabilities were about 184 billion, according to Ardonio, who referred Tether's Q3 attestation report. He added, Tether had at the end of Q3 2025 about 7 billion in excess equity, on top of the about 184.5 billion in stablecoin reserves, plus about another 23 billion in retained earnings as part of our Tether group equity. S&P made the mistake of not considering the additional group equity, nor the roughly 500 million in monthly base profits generated by U.S. Treasury yields alone. Attorney continue. This is his ex-post. Paolo Ardonio, Tether FUD. For the latest attestation announcement, Q3 2025, Tether will continue to maintain a multi-billion-dollar excess reserve buffer and an overall proprietary group equity approaching 30 billion. Tether had at the end of Q3 2025 7 billion excess equity on top of the 184.5 billion stablecoin reserves. Another 23 billion in retained earnings as part of the Tether group equity. Tether group total assets 215 billion, stablecoin liabilities 184.5 billion. S&P made the mistake of not considering the additional group equity nor the 500 million in monthly base profits generated by U.S. Treasury yields alone. Some influencers are either bad or at math or have the incentive to push our competitors. Forever trusting who we are, no, nothing else matters. So that was the CEO, Paolo Ardonio. S&P Global downgraded USDT's dollar peg rating to weak on Wednesday, the lowest score on its scale, prompting fear, uncertainty, and doubt, some FUD, from some analysis about the company, which has become a critical piece of crypto markets infrastructure. Analysis debate Tether's balance sheet fundamentals. Arthur Hayes, a market analyst and founder of BigMix crypto exchange, speculated that Tether is buying large quantities of gold and BTC to compensate for income shortfalls produced by falling U.S. Treasury yields. As the Federal Reserve slashes interest rates, the gold and BTC should go up in value, Hayes said, but he also warned that a steep correction in these assets could spell trouble for Tether. A roughly 30% decline in the gold and BTC position will wipe out their equity, and then USDT will be, in theory, insolvent, he said. Arthur Hayes it's a post from Arthur Hayes. The Tether folks are in the early innings of a running massive interest rate trade. However, this audit is they think that the Fed will cut rates, which crushes their interest income. In response, they are buying gold and BTC that shall in theory moon as the price of money falls. As roughly 30% of decline in the gold plus BTC position will wipe out their equity, and then USDT will be in theory insolvent. I'm sure some large holder in exchange will demand a real-time view of their VS balance sheet. Sorry, another bull crap. So they can assess the solvency risk of Tether. Get out your popcorn. I expect the MSM to run wild with this, especially all the editors with TDS who want to shit on Lutnick and Cantor for backing this stablecoin. So this is their balance sheet right here for Tether. Joseph Ayob, the former lead digital assets analyst at financial services giant Citi, said he spent hundreds of hours researching Tether as an analysis for the company and rebuff Hayes' analysis. Tether has excess assets beyond what it reports and has extremely lucrative business that generates billions of dollars in interest income with only 150 employees. And it's better collateralized than traditional banks, Ayob said. So I guess there's some funny stuff going on with Tether. They're claiming that they have a lot of money in their balance sheet. The S&P rating saying they are weak. You weak, homie. They're calling them mid. So who knows really what's going on back out there? You know, we can't really see for ourselves what's behind the curtains. But hopefully it's nothing too serious, because if Tether was to be insolvent, that's going to cause a huge black swan effect in the crypto market. But we'll see what happens, right? All right, let's move on. Let's move on to our next story. Oh wait, let me see. All right, hold on. Let me check with the live chat real quick. If you're in the live chat, say what's up, guys. CryptoPop is in there. All right, to our next story. BeinCrypto.com. Tomorrow, the Fed ends QT. Crypto thinks the melt up starts now. This is from yesterday, November 30. Fed ends QT balance sheet at 6.57 trillion and boosting liquidity. Analysis compare conditions to 2019 when QT pause sparked crypto's rally. Rise in M2 and Ripple liquidity may trigger early all season and Bitcoin upside. All right, let's see. On December 1st, the Federal Reserve will officially end quantitative tightening QT, freezing its balance sheet at 6.57 trillion after draining 2.39 trillion from the system. Analysis point to parallels with 2019 when the last QT pause coincided with a major bottom in altcoins and surge in Bitcoin, with liquidity returning and interest rates already cut to 3.75 and 4%. Crypto markets are bracing for a potential bullish shift. Fed ends QT tomorrow, which is today. Crypto Eyes 2019. A style liquidity boost. The Fed's halt of its balance sheet runoff comes amid a strained bank reserves, now roughly 3 trillion or about 10% of US GDP. The overnight reserves repo facility, which previously absorbed 2.5 trillion in excess cash, has dropped near zero, removing a key liquidity buffer. October 2025, so the secure overnight financing rate spiked to 4.25%, exceeding the Fed's target range. The standing repo facility recorded a single-day activation of 18.5 billion, reflecting persistent demand for liquidity. FOMC minutes from October 29 detail operation adjustments designed to improve policy transmission. The committee decided to conclude the reduction of its aggregated securities holdings on December 1st. Read an excerpt in the Fed's October 29 statement. This means the QT officially ends December 1st, and the Fed will stop letting its securities mature without reinvestment. From that day forward, the balance sheet will no longer shrink. The committee noted that downside risks to employment have risen, even though unemployment remains low and inflation somewhat elevated. Analysts note that this marks a long-term shift. The standing repo facility, initially an emergency tool, now functions as a permanent daily liquidity provider, effectively embedding the Fed in Treasury market operations. Researcher Shanaka Aslam describes this as the standing repo era, a structural transformation with lasting inflation for global finance. Shanaka Aslam Pereira This is his ex post. The Fed just crossed the threshold. No one is discussing. December. Let me show some more. I guess I'll read the whole thing. The Fed just crossed the threshold no one is discussing. December 1st, 2025, the Federal Reserve terminates quantitative tightening, balance sheets frozen at 6.57 trillion, the largest liquidity withdrawal in central banking history, ends after draining 2.39 trillion from the financial system. But this is not normalization, this is transformation. The overnight reserves repo facility, which absorbed 2.5 trillion in excess cash at its peak, has collapsed to near zero. The buffer that protected the system for 3 years no longer exists. Bank reserves have fallen to 3 trillion, roughly 10% of the GDP, the threshold where stability becomes fragile. In November, the secure overnight financing rate spiked to 4.25%, breaching the first target corridor. The standing repo facility drew 18.5 billion in a single day, its largest activation ever. The backstop design for emergency has become an operational necessity. What does this mean? The Federal Reserve has permanently embedded itself into the daily functioning of Treasury markets. Every night, the SRF stands ready to convert government debt into reserves on demand, without limit. The central bank is no longer the lender of last resort, it is the lender of continuous resort. Meanwhile, the December 10 FOMC meets with 82% odds of a rate cut, navigating blind after 40-day government shutdown and raised 2 months of inflation data. CPI sits at 3%, a full point above target. The committee will vote without knowing what prices did during the blackout. Federal debt exceeds 36% trillion. Annual interest cost surpasses 1 trillion. The architecture now in place guarantees that Treasury collateral can always be monetized. This is not a policy adjustment. This is the birth of a new monetary regime. The standing repo era has begun. The implications will unfold for decades. All right, so that's what Shinak had to say on his post. Let's see. Historical parallels and crypto market implications. Crypto analysts are drawing direct comparisons to August 2019 with the Fed ended QT and Altcoins bottom. Crypto bullet. Others BTC and Wall CL, Fed balance sheet. The end of QT marked the bottom of others BTC back in August 2019. This time QT ends December 1st. The all super cycle begins tomorrow. Bitcoin dominance is below 60%. The global M2 money supply is rising and historically leads BTC by 10 to 12 weeks. This is the chart. The end of QT could inject up to 95 billion per month in liquidity, supporting large cap cryptocurrencies including Bitcoin, Ethereum, Solana, BNB. Gold's risen all-time high provides additional correlation as BTC often lags gold prices moves by roughly 12 weeks. Meanwhile, the Fed's December 10 FOMC meeting occurs amid unusual conditions, a 40-day government shutdown, and raised 2 months of CPI data, leaving policymakers without fresh inflation figures. CPI currently sits at 3% above the Fed's 2% target. Treasury Secretary Scott Bessent confirmed that the Fed is considering additional rate cuts after October's 25 BPS reduction. The U.S. federal debt exceeds 36 trillion with annual interest costs above 1 trillion. The standard repo facility now enables rapid monetization of Treasury collateral, representing a structural shift with long-term market implications. Some crypto analysts anticipate an immediate rally following QT's end, while others see a small alt season within 2 to 3 months and a larger market cycle in 2017 and 2018. This is for Virtual Bacon. Fed liquidity is here. The crypto melt-up starts now. The Fed is on the verge of ending QT just like 2019, and that means one thing: liquidity is coming back. If you know what this means for Bitcoin and altcoins, you should be excited. Here's what I think. All right. Consensus holds that liquidity rather than hype or Bitcoin halvings has historically driven crypto cycles. December 1st marks a critical turning point as the Fed's liquidity pivot could remove one major obstacle for risk assets. The move could set the stage for crypto markets to respond, whether through a mini rally or the early stages of a broader supercycle. While QT ends December 1st, that was today, the Fed emphasizes that future adjustments to the federal funds rate will depend on incoming data and changing economic risks. The signals that the Fed is keeping the monetary policy flexible, prepared to adjust rates or other measures if necessary. Investors should watch interest rates guidance, treasury liquid operations, and M2 money supply trends in the coming weeks. So it's a very bullish article for the altcoin season, the super cycle as they're calling it. I mean, this time around, the bull market is looking very different. From conversations that I had with Crypto Poppy, he's been around for a long time now, for a really long time in the crypto market, and he's saying that this cycle has been completely different from previous cycles because, a coin will start popping off and then everything else follows. We recently had Zcash going crazy, so and other coins follow after that. So he's definitely saying things have changed on the cycles. I mean, that's what we stayed waiting for much longer in some coins because the cycle hasn't started like it used to do. So, anyways, mentioning Zcash, that's gonna lead me to my last story for today. Let me close these tabs real quick. This is from Yahoo Finance. Because there's one shocking new catalyst sent Zcash to $1,000. But before I get started with the news, hold on. Let me see. Oops. Let me go back on the screen. Before I keep going with the news, please make sure you subscribe to the YouTube channel. We're on our way to 1,000 YouTube subscribers. We're currently at 753. If you haven't subscribed yet, please subscribe. Comment down below. Leave questions. Leave suggestions for the live technical analysis videos. Like this video, share it. Please help out the channel. It doesn't cost a thing. And we made the call on Zcash. So if you've been watching the channel for a year now, when we called Zcash, you guys could have been right along with us right now. We're buying Zcash at $20. It's at $300 and something right now. So, and now we have news that is going to go to 1,000. But whatever, right? Doesn't matter. There's more calls that we have on store for you guys. So please make sure you subscribe to the YouTube channel. Turn on your notification bell so you get updated when we're going live, when we post a new video. Anyways, let me check the live chat real quick before I move on. Let's see. Oh yeah, Crypto Poppy just had a deep tissue massage. He's keeping up with the great stream. Thank you, Crypto Poppy. Co-host of the show. All right, so I have a buddy of mine coming by too. So let's get through this live stream for today. Can't wait till we do another technical analysis video. All right, so let me get back to the screen. Okay. Could this one shocking new catalyst send Zcash to $1,000? This is from Yahoo Finance. Let's see the key points. A crypto exchange that had delisted Zcash just relisted it. There's now a much larger population of potential buyers for the coin, and that's happening right when it's looking better than it has for years. 10 stocks will like better than Zcash. Okay, I'm not reading that. All right. And crypto reversals of fortune can happen unexpectedly and in direct contradiction to the previously established context, like what's going on with Zcash right now. The leading privacy coin has already staged a huge comeback this year, climbing from around $50 in mid-September to its recent highs above $700 before settling near the $450 range. Remember, we're starting to buy around $25 and $30. Let's keep going. Now it's getting a shocking new catalyst that holds almost nobody expected, and the implications for its entire narrative are significant. Its price might even reach $1,000 next year. Here's what's going on. This could be a turning point. Zcash history is marred by difficulty. Regulators tend to dislike privacy coins as they can be used to conceal illicit activities such as money laundering. In many of the most important jurisdictions for the crypto sector, crypto exchanges that choose to list privacy assets have traditionally faced significant pushback and regulatory scrutiny. In some cases, like with the major crypto exchange, OKX, the pushback resulted in the delisting of privacy coins, including Zcash. That was a major setback, and when cryptocurrencies aren't purchasable on the exchanges investors use the most, it limits the capital inflows and thus tends to significantly depress their growth ceiling. But as of November 24, OKX released the Zcash, and there's an ample reason to believe that this is going to be a major catalyst for the coin. OKX started in China and serves millions of users worldwide, while it's still explicitly catering to Chinese-speaking investors, whereas mainland China maintains a formal ban on cryptocurrency trading and has declared all crypto transactions illegal, including those via offshore exchange. Hong Kong provides legal paths for Chinese customers who independently seek out these platforms. In other words, OKX cannot advertise directly in mainland China, but it is still arguably the top offshore exchange used by Chinese retail investors. And that's a demographic with a colossal amount of capital, which hasn't had the opportunity to invest in Zcash and other privacy assets for at least the last couple of years. Even if a slice of that group turns into a sustained inflows, it is likely that Zcash will capture a portion of the new capital, and it might retain it too. Furthermore, the listings is arriving just as Zcash has abruptly become one of the most talked about assets in the market, at least among crypto natives, after years of being forgotten, and with its price is in the doldrums. Which means, This means that OKX listing shows that at least one major crypto exchange believes Zcash can be operated legally within a bunch of different and constantly evolving regulatory expectations. For a project, those biggest bearish argument has long been that regulatory will be. For a project whose biggest bearish argument has long been that regulators will ban it or make it difficult to buy, this is a major update to the investment thesis, as the bearish view is now somewhat less plausible than before. What else has got to go right? Zcash climbing to $1,000 and beyond is no longer a pipe dream, but investors should take care to appreciate that there are still a lot of near-term headwinds as well as longer-term headwinds that make this a fairly risky investment despite its merits. A move to $1,000 will require more than doubling its market cap today to reach $17 billion. It's already up 690 this year so far. Buying the coin after it just made such a wild move means risking that the momentum will peter out. Additionally, regulation remains a significant concern, and this is not yet settled anywhere in the world in any way, shape, or form. There's no guarantee that OKX or any other exchange will continue to list Zcash if the policy shifts against privacy assets again. OKX's decision is a data point that shows that attitudes can quickly soften when there's obviously money to be made, but it does not guarantee that the delistings are a thing of the past. There's still an abundance of uncertainty that'll need to be navigated over the next few years. Therefore, a long-term investor's perspective on Zcash following this catalyst is a high-risk, high-reward play, suitable only for purchasing in small quantities than holding for extended periods. This coin is definitely not a good choice for risk-averse and impatient investors. Don't do it if you can't handle the heat. Should you buy stock in Zcash right now? Before you buy stock in Zcash, consider this. The Motley Fool Stock Advisor Analysis team just identified what they believe are the 10 best stocks for investors to buy now, and Zcash wasn't one of them. The 10 stocks that may cut produce monster returns in the coming years. Consider when Netflix made this list in December 17, 2004. If you invested $1,000 at that time for a recommendation, you have $580,000. Or when Nvidia made this list in April 15, 2005, if you invested $1,000 at the time of our recommendation, you have $1 million. Okay, so if you invested 20 years ago, you'd be rich right now. 20 years ago. So they're basically saying if you invest in Zcash for now and 20 years from now, you probably make somewhere close to a half to $1 full million in 20 years. If you make their picks, okay? I mean, not only Zcash, the stocks that they're recommending. So you have to wait 20 years for that, okay? This is why I love crypto, because you don't have to wait that long. All right, let's keep reading. Now, it's worth noting stocks advisors' total average return is 1,000%, a market-crushing outperformance compared to 194% for the S&P 500. Okay, so I guess that was just advertisement. All right. Let's see. They're here. Key points. Let's read. Zcash is in a powerful uptrend. It is scarce like Bitcoin. It also has useful privacy features. Regulators are going to be constant stumbling block in the long term. 10,000. Okay. The privacy coin Zcash is currently leading the crypto market, rising while everything is also struggling. It ripped a gain of 1,250% in the last 3 months alone, bolting back into the top tier of coins by market value. Is this strength the result of durable value creation, or is it a hot stove waiting to burn those who invest? What do you guys think? You guys answer that question. Yeah, I'll read the whole article. Why Zcash is valuable. Unlike many other cryptocurrencies, Zcash is obviously valuable. At a high level, Zcash inherits Bitcoin's supply policies, which is a massive point in its favor. Like Bitcoin, Zcash has an unchanged hard cap of 21 million coins that can even ever exist, and a mining-based issuance schedule that halves its rewards about every 4 years, steadily reducing new supply entering the market and creating the conditions for scarcity to boost its price over the long term. Zcash, second halving arrived in late November 2024, historically, at least in the case of Bitcoin, the 18 months following the halving trend to be profitable times to be a holder. It's undeniable that Zcash's surge has been visible enough to overtake the leading rival, privacy coins by market cap, and it may portend a broad revival in privacy-focused assets. On that front, under the hood, the technology of this chain is a major appeal. Sash popularized to use the CK snarks, a form of cryptography that lets a network validate transactions without revealing amount or counterparts on chain. In a nutshell, when the use property is possible to use Zcash in privacy, such as nobody will know you're transacting with or for how much. That privacy utility is very different from Bitcoin's transparency, and it is precisely what some investors are seeking as on-chain activity becomes more surveilled by numerous actors. If you squint, the investment thesis for Zcash looks a lot like privacy-tilted cousin of Bitcoin's scarcity story, with decreasing new supply and expanding set of holders who value the asset's specific use case. Let's see how much more we got. Oh man, I don't. All right, we're almost done. I'm gonna read this whole thing. I'm tired of reading this shit. Sorry, guys, but I'm gonna read it. The policy headwind is probably a deal breaker. Now let's take a look at the devil's advocate view of this coin. Hold on, let me take a quick look. I'm waiting for somebody to get here, so let me just check real quick. Hold on. Hold on. Let me check. Before I keep reading this, I need a little break. All right, my buddy's bringing me a drink because I'm thirsty from talking this much and reading this much. All right, let me see. Let's check the live chat before. Let's take this during this little break. Let's see. Maybe Crypto Pop is still on the live chat. Okay, let's keep reading. The policy headwind is probably a deal breaker. Now let's take a look at what the devil's advocate view of this coin. From the perspective, Zcash's strongest differentiator is privacy features. It is also its heaviest baggage. Policymakers around the globe have repeatedly targeted privacy coins with new regulations or outright bans, which constrains crypto exchange listing, liquidity, and mainstream adoption, especially among the largest potential adopters like financial institutions. These aren't solely academic concerns. Japan effectively banned privacy coins from domestic exchanges in 2018, leading platforms to pull Zcash. South Korea required exchanges to delist privacy coins in 2021 as part of tightening anti-money laundering rules. Europe has also dealt with intermittent delistings and shifting regulations, leading to a frustratingly unpredictable access of environment. It's probable that the EU will probably prohibit privacy coins altogether, contingent upon implementing specific regulations. So whereas Bitcoin has a scarcity narrative that is increasingly institution friendly, Zcash privacy design makes it far more likely to be left out in the cold, especially if regulators continue to aggressively disfavor or attempt to stomp out the privacy coin segment as a whole. That doesn't negate Zcash utility, but it does mean the path to durable adoption depends on a shift in regulatory disposition as a whole, which does not appear to be happening and might not ever. Moreover, this asset price is obviously on a hot streak right now. Another near-term risk that buyers today could be stuck underwater for an uncomfortably long time if sentiment suddenly cools or exchanges listing and tighten again. Therefore, Zcash probably isn't the right pick for most investors, even if it will probably continue to gain in value quite quickly for a while longer. A reasonable plan, if you're still intrigued but appropriately cautious, is to treat Zcash as a niche position, size small and accumulative gradually on weakness. All right. If regulators eventually allow access to this coin to widen, Zcash could compound its value significantly thanks to its Bitcoin-like issuance. But if compliance frictions re-intensifies or remains prohibited, as they most likely will, expect long, choppy stretches without much reward once this rally fades. All right, the biggest question here. Should you invest $1,000 in Zcash right now before you buy stock in Zcash? Consider this. The monthly full analysis, okay, all right, whatever. All right. Man, this is a long one. All right, that's it. I'm no more of this. No more of this one, okay? That's it. All right. So let's just to finish this off with, let's take a look at the markets right now. Let's see where we're at right now. Let's take a look at Bitcoin, see how it's doing. Hold on, guys. I need to fix my screen. Transform. Oh, wait, no. Transform. Gotta crop the screen a little bit. Sorry, guys, you guys happen to see this. How I'm making this sausage right now, right? Okay, right there. So we're looking at about 80. All right, so right there. We're there. Okay, guys. Okay, so we're looking at Bitcoin right now. Let's see, 87,107. So it's up right now. It's up again. 1% for the 24-hour mark. The weekly is down 1%. Monthly is down 20%. Yearly is down 9%. And all along is up. How many numbers is this? 140,000%. Let's look at the highest price. The highest all-time high, $126,188. The lowest, 0.04 cents, I guess. No, it's been to zero. It wasn't worth anything at one point, right? All right, let's do ETH. Ethereum. Let's see how Ethereum is looking right now. $2,800. For the hour is down 0.44%. For the week is up is down 3.94%. For the month is down 27%. For the years, down 23%. And for the overall is up 99,000%. All-time high, $4,953 back in August 24, 2025. And all-time low, 0.40 cents back in October 21, 2015. All right, another one. Let's see. Let's check out check out Zcash. We're going to check out my portfolio real quick. Let me see. All right. All right, Zcash. All time is down 92%, so there's a long way to go. For the year, let's see how we're looking. 466% for the year. For the month, down 21%. For the week is down 35%. And for the 24 hours, down 8.3%. Size price $5,941, and all-time low is $15. So the highest price was back in October 29, 2016, and the lowest has been July 4, 2024. Another one that's in my portfolio is Compound. Let's look at Compound right now. We're thinking it might be a move like Zcash, so don't quote me on this unless it's right. Anyways, Compound is down for the day 2.72%. For the week is up 10%. That's good. For the month is down 7%. For the year is down 56%, and overall is down 67%. All-time high is $911, and all-time low is $18. The all-time high happened in May 11, 2021, and the all-time low happened October 10, 2025. All right, let's look at another one that's in my portfolio right now. Ethereum Classic. Let's see how that is doing. Wait, this is not the right one. Sorry, is that a, no. Ethereum Classic. What's the ticker for Ethereum Classic? Let's see. Yeah, Ethereum. Let's see. Ethereum Classic. Where are you? Oh, there you go. All right, so Ethereum Classic is $12 right now. Overall is up 1,626%. 1 year is down 60%. For the month is down 19%. For the week is down 7.7%, and for the 24 hours up 0.49%. Highest price has been $176. All-time high May 6, 2021, and the all-time low has been 0.45 cents. July 25th, 2016. Another one that I forgot to put in here is going to be Dash, not the DoorDash, Dash. All right, it's currently at $47.87. For the days, it's up 0.31%. For the week is down 14%. For the month is down 35%. For the year is down 7.69%, and overall is up 22,000%. Oh, that's great. Its highest price has been $1,642. That was in December 20, 2017. And all-time low has been 0.21 cents, February 14, 2014. It's been around for a while. What else we got? We got Algorand. Let's see what it's looking at. Like 0.12 cents. Overall is down 96%. For the year, 73%. For the month, 27%. For the week, 10%. And 24 hours is 0.16% down. Let's see. This highest price has been $3.28. That was back in June 20, 2019. And an all-time low has been 0.08 cents back in September 11, 2023. Let's see. Which one is another one that I'm holding? Compound, Algorand. Oh, NCT. We got NCT as well. Paul is warm. It's at 0.01 cents right now. It's down 2% for the day, 4% for the week, 36% for the month, 58% for the year, and up 180% for the overall. Highest price has been 17 cents back in June 13, 2022, and the lowest has been 0.0006 back in December 6, 2020. What else do I have? I don't know if you guys saw this. If you have a Coinbase account, Monad. Do you guys have any Monad? Do you guys have any Monad? There's a new coin on Coinbase. They announced it. I figure it's gonna be a good pump. It's still yet to be determined. I mean, I almost 100% my investment on that coin. I just didn't pull out because I'm thinking, no, it's probably gonna go higher. It might. We'll see. Let's take a look at it real quick. All-time high price is up 15%. For the years, 3%. 3% for the month. 7% down for the week, and 25% up for the day. So it's not too bad. It's pumping. All-time high is 0.04 cents. That was November 26th, 2025, not too long ago. And all-time low is going to be November 24, 2025 at 0.02 cents. So it hasn't done much yet, but that's one of the coins that I hold right now. And the last one, but not least, let's look at Swift coin, SWFT coin. SWFT coin. SWFT. There we go. Let's see what it's looking at right now. For the day, it's up 2%. For the week is up 1% or almost 2%. For the month is down 15%. For the year is up 10%. And overall is down 92%. Current price is 0.005. Let's see. Hold on. Okay, let me see, guys. I gotta go get my buddy real quick. Hold tight. Hold tight. All right, guys, we're back. My buddy's here, Chris Ortega. He's in the back behind the scenes right now. But so this is the last coin I'm looking at right now. Swift coin, that's the last one I have, is at 0.00. Hold on, let me fix the screen so you can see it too. Oh, he's taking a look at the screen too. There we go. All right, so right now, Swift coin. We're looking at a Swift coin. All is down 92% for the year. Up 10% for the, for the long hauls, 92%. Let's go back at it. 1 year is up 10%. 1 month is down 14%. For the week is 2%. And for the day, is up 2%. The highest price on this coin has been 0.09, almost 10 cents. That was back in January 2018. And the all-time low has been 0.0046. That's March 12, 2020. And that's pretty much it, guys, for all the coins that I wanted to show you guys today. All right, let's get back on the main screen. Oh, I lost my studio. Hold on. Let's see. Oh, I have it right there. It just blacks out. All right, but anyways, guys, that was it for today's episode. I just covered some of the crypto news, what's happening today. We're just waiting for another live technical analysis episode with Crypto Poppy today. That's it for today. Just cover some news. Nothing too crazy. I'm trying to be more consistent with the show. But anyways, before I log out, if you haven't subscribed to the YouTube channel, please make sure you do. We're on our road to 1,000 subscribers. We're currently sitting at about 753 subscribers as of the recording of this video. If you haven't, subscribe, like this video, hit the notification bell, and leave a comment down below. And if you have any suggestions for coins for the next live technical analysis, drop them here, or go to my social media, Buddhismo Crypto on Instagram, or whatever you could find me. My information is there. Okay, guys? But anyways, thank you guys for tuning in today. I appreciate you guys, and we're logging off.